Hey traders, Raghee here. Welcome to Charts and Coffee for September 22nd. Great to see everybody. All right, so we have today we have FOMC day. So if you haven't yet thought about, what is a caution day, if you haven't thought about events presenting a certain amount of volatility and therefore also risk, this is one of those days. And there are a number of caution days that we're going to have sort of sprinkled throughout a month. It doesn't mean that you can't trade. It simply means that if you trade, my recommendation, what I do for myself is I'll trade more conservatively, meaning smaller position size, more conservative levels. And I'm aware of time, right? I'm aware of when that morning session winds down. How is the European session going to pre-position themselves before the 2 p.m. Eastern FOMC? And then at that FOMC point in time, I can, hit the eject button and think about a time-based exit. So these are all things that we can think about when we're dealing with hot zones like the FOMC. All right, so that's kind of the bigger picture here. Is the FOMC going to drop the hammer on the market and sort of push this taper narrative forward? Or are they going to put it off a little bit longer, knowing that the probability is that they're probably not going to start till November, and they're going to create a very slow, gradual ramp up to that eventual taper? That's my guess. And, it's all a guess. Unless you happen to be one of the voting members, it's all a guess. So that's how we will prepare for the unknown. All right. So with that being said, let's kick it off with your questions. Starting with PH19 Golf. All right. Good morning. Yesterday was an inside day for NQ. Correct? Correct. Well, yes. So if you look at the 21st, that was that pause inside day. So if I remember the rules correctly, we need to close above the inside bar today to think about going long. So from a longer term perspective, daily time frame perspective, that would be yes, that would be correct. Let me this is the toss platform. So my daily time frame is sort of scrunched there to the right, all the way there to the right. So you can see what I've got here. And by the way, it's a really great reminder. If you are a day trader, I think a lot of day traders tend to neglect daily time frames in the previous open, high, low, close, the previous session, those levels, and how that could impact momentum, how that could become support, resistance, different levels to create stalls, etc. So that is correct, PH. Thanks for the question. Hey there, Michael. I'm ready to start trading with me. Oh, cool. I'm a novice and don't know which program to start with. Who do I contact to find out what is best for me? So, Michael, we have a lot of different services here at Simpler Trading. Everything from an options room to a futures room to a day trading room, which is brand new. We have a number of masteries where you can study with one of our traders, in some cases two. And so, yeah, I would just contact the office. You can head on over to simplertrading.com, and you can also, read bios on all the different traders to see who resonates with you. And, of course, contact the office, or you can get all the information you need at our website. It's really, really thorough. And as far as Toby's, the Anderson Advisor, I believe it's simplertrading.com/tax. And you can also get the resources from that webinar. I'll push it through in the chat. It's here. I have it yesterday, aba.link/traders21. And the resource package that Anderson put together will be at that page, okay, at that link. Really good stuff from Toby yesterday. And if you registered for it already, then the replay should be getting sent out probably today. I don't know the schedule on that, but yeah, it will be sent out today, is my guess. All right. Thanks for the question, Michael. All right, Prabish, good morning. Since the trends are broken on all indices, yes, what would I look for a swing trade in the current setup? Still looking for double green. So if you're wondering what do we do, remember all broken up trends. That one red. Well, let's pull up TradingView here. So let me head on over to my Firefox. There we go. Okay, so let's start with the Nasdaq. And Monday's candle absolutely was the break of the trend. It was the break of the trend because it's the first red. It broke certain barriers like the support of the wave. We went yellow on the JT multi, which is not immediately a trend break, but we now have a confirmed trend break through the combination of red grab candles and yellow lower row JT multi. Okay, so the pattern for a break is here. Doesn't mean that I'm shorting. And what am I going to do now? I'm going to treat this market as distribution. So are there double green markets out there? Oh gosh, yes. And in fact, a large part of what I am going to do this morning with our monthly. Now I get together with our mastery members every single Wednesday. And so this is our monthly session. It goes for, I don't know, 2.5 hours. And, part of what we're going to talk about is rebuilding the watch list. And is it going to be, emphasizing double green? I mean, oh yeah, of course. I mean, we always want to find all the trends, specifically uptrends, that are still valid, that are still high probability. And then we'll shift to markets that are in different degrees of chop, aka distribution. So yes, the chop means that we'll look for fades, and the trends mean we'll still continue to buy the dips. I'm not really seeing a lot, although there are pockets of the market that are valid to sell the rips, which is just the other side of a buy the dip. It's shorting downtrends as opposed to buying pullbacks in uptrends. But I'm still in buy the dip mode, unless the market's gone choppy. The market's gone choppy, pull up a slow stochastic, overlay that with the V-score. Or, many of you have this, pull up the ready, aim, fire, and I love to overlay that with a V-score. So I'm getting a price-based assessment of what could be oversold support, and I'm getting a volume-based assessment of that. So thanks for the question. Good morning, everybody. Thanks. All right, so what is our next question? mRNA. Sure, Ron. Seems to have retested 415. What do its chances of moving up look like? Well, pretty darn good. Now, remembering that mRNA is going to be very susceptible to news, very sensitive to different narratives that have nothing to do with the technicals. If I just look at the structure, we are green over green. That's great. That is the environment where we look to buy dips, and these are what the previous dips have looked like. Now, notice I'm focusing on dips that are hitting the 34 EMA wave, and so that to me is my preferred dip. As we move higher off that, I'm not necessarily as interested, because I'm not interested in having to buy a call with bullish momentum. But those last previous dips, the support level that we're really focused on, yeah, I would say it's closer to about 40. Gosh, that was about what was the low there? Yeah, 407. So I don't have 415 as necessarily a decision level, but I hear what you're saying, and I think they are quite high, the probability of continuation. So I'm with you there. Good structure, nice pullbacks, good response once we pull back to those levels. So yeah, great stuff. Thank you for the question. And next up is, hey there, Mark. grabbing pips on, yeah. So let's talk about the dollar for a moment. Hey there, Mark. Thanks for reminding us about the importance of currencies when the central bank is on tap. I think the idea that the dollar is going to suddenly just explode with strength is not wrong per se. It's just not going to be, take a look here. It's just not going to be something that I want to argue with. In other words, I'd rather be long dollar, especially if we're north of this 200. You'll notice the 200, that is support, right? So I'm going to put that in green. And I'm looking for movement higher. We just now have 2 red propulsion dots, which means the 3 exponential moving average has crossed the 8, interacted with price in a very specific way, and that is what turns on the simpler propulsion here. So the 8 exponential moving average is in play. That would probably be a pretty darn good precursor to a return to a lower JT multi, which would indicate the trend, what we saw, say, in mid-August. So that's definitely something that I want to do in terms of buy dollars. But then the question becomes where? What's the other side of the dollar buy? That's the way currencies, whether you're looking at Forex, whether you're looking at futures, whether you're playing the ETFs of these currencies, it's always about what is the driver of the pair? What does the driver mean? Am I interested in buying dollars, selling euro, shorting Canadian dollar, shorting Australian dollar? What's the main reason to engage that currency? And for me, I think a great driver right now is long US dollar. And just as the dollar has been bouncing off of as support, the 200, you'll notice the 200 has been in play as resistance on the 6E, which is the euro versus US dollar. So yeah, and then you mentioned you're in Canadian dollar. I think what's really cool about some of these setups right now in terms of, again, the dollar long position is if I can find a weaker counter currency, long dollar, short Canadian, if I can find some good contrast between strength, dollar, and weakness, whatever the other side of the currency is. Australian dollar has been a great one. Euro's been solid. I would throw Canadian dollar in there too. Yeah, I'm with you. And I don't want to bet against US dollars, but I sure would love another correction before I buy dollars again. Does it have to be to the 200? No, but I do want some sort of movement to the downside. Maybe it's going to be to the VWAP. Maybe it's going to be to the point of control here at about 92.65 on the dollar index. So yeah, I'm with you on that. I like the dollar buys, and it makes sense to keep looking for them. Absolutely. Thanks for the question, Mark. Or really the comment. Chris, good morning. Am I still looking for lower on the RTY for an entry? Right. So yesterday in the free video, and if you haven't checked it out, it's sitting over at the Simpler Trading YouTube channel. I was looking at yet another buy in the Russell. And, we've had an opportunity here. We've had an opportunity here. And so, yeah, I'm really just ready to try to take advantage of a move off this 200 once again. Again, this 200 is support, right? North of the 200 is bullish sentiment. So what I want to remember is that if we have support at that level, the closer that I can be to that white line, the propulsion dots, the closer I can be to that, the more conservative my entry, the more I can control risk, the larger I would then hope that I can take a larger position. Today's candle, this reminds you of Russian dolls, right? Large candle, inside day, and then right now we have another inside day. So it's 2 inside days so far in a row. I'm not ruling out a move higher without a touch on the 200, but here's the thing, and this is the best visual for it. Do I know that we're going to get down to this level? I don't, right? Trading is never about the markets are going to go here. No, it's never about predicting. The more I hear people predict this is where the markets are going to go, I just shut it off. What I want to do is be Ted Williams, arguably one of the greatest hitters ever. Of course, I'm biased. I'm a Bo Sox fan. This is how we should think about trading and our levels. Is price at a level that we can do something, right? For the batting analogy, is this a pitch that we can take a swing at? My pitch isn't until we get pretty darn close to that 200. So yes, directionally, I think it's going to likely move higher, but it could very well do it without me if it doesn't get to my strike zone, essentially, right? What is that area above the plate that I know that I can make contact with? As Ted Williams talked about, he could, to a high degree, predict his batting average, knowing what type of pitches he got. And I think understanding your pitch, which is something I talk a lot about when I day trade, it's no different at the end of day trading level. So the closer, the better. And the further away, it's just a little bit more risk. So I would say as close to, say, 2150 as possible. And then, I would start thinking about it. So 2150 to 2135 would be probably a really good zone to think about. And this would apply to mini RTY, micro RTY, and IWM calls. And if you want more detail on the setup, like I said, last night's free video was the full breakdown of this setup. All right. Thank you, Chris. Yeah, and absolutely, I'm still going to be looking for it. I just don't know if I'm going to get it, but I do know what happens if we sink into that 2150 to 2135 range. All right. So next up is, can we look at S? It's an IPO. I don't play IPOs very often. Here's what I'll tell you to do. Great structure on this one. Call one. Great structure. So what I would say is, here's your IPO checklist. This is how I look at it. Anchor a volume weighted average price to the first day of trading. Know whether it's a DPO or IPO. This is probably not a DPO because DPOs tend to sell off when they're going live. IPOs, well, that's not usually the first sort of knee-jerk reaction. So I would say this is an IPO and a DPO. All right. Next is, are we above the volume weighted average price? And then since this is an IPO, you want to be aware of the quiet period and the holding period. And so, can you buy pullbacks? Sure. I tend to not get really serious about an IPO until after the holding period. So there's really two stages to a brand new stock, right? The time between its first day of trading and the reaction after the holding period, meaning now insiders get to liquidate their shares if they want to. And then there's that second period of a brand new stock's life where now we get to see what it's really made of after the insiders potentially take profit. So between the first day of trading and the holding period, and then from the holding period forward. So that's the way I look at any kind of IPO. All right. Thanks for the question. FDX, FedEx had a very rough earnings, didn't they? And this is not surprising to me in terms of lower lows, because let's face it, FedEx's lower lows are not new. FedEx has been in a downtrend since August 4. This is not a new development. So having said that, FedEx is one of the rare instances that you're looking for one of two things. Yeah, you can short the rips. Absolutely. Movement higher is very much a short the rip environment on FedEx. Number two is, if you don't like the short here, if you think that there's a really great opportunity to potentially get long FedEx, I would wait for a 1, 2, 3 bottoming pattern. So once you get the 1, 2, 3 bottoming pattern, that could be the precursor to the reversal, or at least if nothing else, it could be the precursor to more of a sideways chop in FedEx before it transitions to moving higher. So that's the way that I would look at FedEx. The other way that I would look at FedEx is just acknowledge where FedEx is within the passive investing universe. And this is something we're going to talk about here in the Sector Secrets Master here in just a moment when I jump over into that room. FedEx is what? It's a part of the IYT. FedEx is a part of the, let's see, what else am I thinking of? IYT is the one that comes to mind. So open up the transportation ETF, IYT. Look at the holdings. I think FedEx is probably one of the better shorts in that tide, if you will. But IYT, the tide itself, it's been flirting with a downtrend too. This has definitely been a market where you're looking to the short side. So thanks for the question. Appreciate that today. Appreciate y'all today. Great questions. I will see you all tomorrow, same time, same station. Jumping over to our Mastery live trading now, little day trading, little end of day scanning, really just a composite of what I do each and every day. Looking forward to seeing you there. And in the meanwhile, heads up, it's a caution day. In the meanwhile, be good to each other, gang. I'll see you soon.